My name is Rob Livson. I'm the VP of Business Development here at Lightspeed Trading. We're happy to do presentations for various webinars throughout the month to present different topics as far as platform features or strategies or analysis. Today we're happy to have the webinar. It's Discover Scientific Option Trading. It is presented by Ophir, Gottlieb, and Jason Hitchings of Capital Market Laboratories. Before we get started, I just want to go through our brief disclosure, and then we will be on our way here. So if you guys wouldn't mind, we'll just do a quick presentation here. Okay, I apologize about that. Brief disclosure here. This presentation is for informational purposes only. Nothing presented today should be construed as an investment advice or a recommendation to buy, sell, or hold any specific security. Since we don't know everyone's investment objectives or risk tolerance, we're not endorsing any specific trading strategies. Lightspeed Trading, LLC. Lightspeed is not affiliated with these service providers. Data, information, and material content is provided for informational, educational purposes only. Content should neither nor be construed as any offer, solicitation, or recommendation to buy, sell any securities. Every investment decision should be made by the user through the use of such content solely based on the user's independent analysis, taking into consideration your financial circumstances, investment objectives, and risk tolerance. Lightspeed does not endorse, offer, or recommend any of the services provided. Any of the above service providers and any service use, executing trading strategies are solely based on the independent analysis of the user. So we are happy to have the Capital Market Laboratory gentlemen here to present. We have Ophir Gottlieb, the CEO and co-founder of Capital Market Laboratories. He contributes to Yahoo Finance, CNN Money, MarketWatch, Business Insider, and Reuters. He's rated the 14th best finance follows on all of Twitter. He was a former option maker on the NYSE Arc exchange floor and simultaneously the CBOE. And he's gained notoriety as managing director of client services and algorithmic trading for LiveAll Inc., recently acquired by the CBOE. We also have Jason Hitchings as well. He's the chief technology officer at CML. He has a diverse background in software engineering, product development, data visualization, as well as numerical analysis and real-time algorithmic option prices. So we're happy to hand over the mic to Ophir and Jason. And guys, please feel free to ask some questions, but certainly we'll provide some time at the end to get to all the questions as well. So without further ado, here is Ophir. I'm going to hand the presentation over to him, make him the presenter, and we will be on our way.
All right, thanks so much, Rob. Yeah, let me see if I can show my screen. Let's see. All right. So thanks for the introduction very much, and thank you for everyone for joining us today. I think can guarantee very little in the world of trading, but I can almost guarantee you that when this webinar is over, you will have learned something that you did not know. So that much I'm willing to go out on a limb and say. Just a reminder, we have our own disclaimers, as Lightspeed does too, so please note that the executions and other statistics on this video do not reflect the impact, if any, of certain market factors such as liquidity and slippage. And of course, past performance does not guarantee future results. Okay, great. I think Rob did a great job of sort of like, the about me, so I'm not going to talk about myself very much, and I'll just get into the presentation and into trading. So when it comes down to it, I think as traders, we want to have a plan in place, and sometimes that plan has to move quickly, if you're looking at intraday charts and day trading, but sometimes you don't have to move quite that fast, and we want to be methodical and empirical, and that's what we're going to look at together today. Also, for the first time ever to any audience, I'm going to show a new technical indicator that we've added to the software. I'm going to start with a pre-recorded video for a few minutes. And it's a fair question to say, why are you playing a video when you're doing a presentation? It turns out that this video, which is about 20 minutes, was actually an hour and a half of content, but with the magic of video editing and audio editing, all of a sudden it's very fast. So we use a video to start because it cuts nice and short and gets through a lot of information quickly. I'm going to come back after the video And I'm going to talk about some index trading, earnings trades, and then so I feel like it's incumbent upon me. There's one VXX trade, whether you've even heard of the VXX or not, don't worry. I think that every trader in the world should at least know exists. Right? It's not a recommendation. I feel like every time I do a presentation, the world must know about this trade. It's just a very interesting instrument and something that certainly every option trader should at least know exists. All right, so I'm gonna play a short video. I'm still here. If you have any Q&A in the meantime, Jason and I are here to answer questions in real time. Also, when I hit play on this video, I'm just going to let it run for about 5 seconds, and I'm going to stop it, and I'm going to make sure that everyone can hear it well, because I don't want to play a silent video. So the first thing I'm going to ask, can everyone see sort of a blank screen that says Trade Machine Expert on the lower left-hand side? Rob, do you see that? Or?
That's what I'm saying up here.
Okay, thanks, Jay. All right, so I'm going to play, guys, I'm just going to play like 5 seconds of a video real quick, and then I'm going to come back live and make sure that it wasn't playing a mute movie. All right, hold on 1 second. Let's talk about answers. Does momentum trading actually work? I mean, we've all... All right.
Yep. Good to go.
All right, here we go. Let's talk about answers. Does momentum trading actually work? I mean, we've all had great momentum trades and we've all lost on momentum trades, but empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? If momentum trading has worked in the past, it should be empirical and explicit. And that's it. Also, how about technical analysis or technical trading? Does it really work? It's all over social media and fintech news, and if it really does work, okay then. Which indicator has worked the best historically, on which stocks, at what times, when has been the best time to exit? Again, what are realistic average returns? What are historical win rates? It doesn't matter how much noise there is out there. If technical analysis works, the results should be empirical and explicit. That's it. And what about non-directional option trading? Has there been a way to profit from this low volatility world, this low VIX world, without making a directional bet, without betting on a bull market continuing, or even more abrupt if we go into a bear market or a correction? Again, empirically, does this work? And if so, when has been the best trade entry? Which stocks have worked the best? And what has been the best time to exit? What are realistic average returns? What are historical win rates? Answers. That's what this is all about. We're going to cover all of this, and we're going to do it pretty quickly. We'll start with momentum, then technical analysis combined with momentum, then non-directional history. All right, let's go. We're going to start with momentum. We'll start with our first pre-earnings pattern. I call this a directional bet on optimism. So one of the least recognized but most important phenomena surrounding this bull market is the amount of optimism that sets in the 2 weeks before earnings in the mega technology stocks. We're talking the FANG stocks. Now this is totally irrespective of whether the stocks have a history of beating earnings. In fact, many of them don't. But in the 2 weeks before earnings, there is a massive momentum rally into the event. What the scanner will help us see later is that while there is this 2-week pattern, sometimes 1 week or even just 3 days presents a better trading window, both with respect to consistency of the win rate and, of course, total returns. We'll start with 2 weeks here and address the other time periods when we cover the scanner. Let's look at a simple idea. Let's just buy a monthly call option in Alphabet 2 weeks before earnings and selling the call before the earnings announcement. So we'll get long a call, we'll go to custom earnings handling, we'll open the trade 14 days before earnings, and we will close the trade 1 day before earnings. We are not taking an earnings bet. This is a pre-earnings trade. And here are the results. We can see across the board, this has been a winner. And just to see what's happening, we can look at the stock price. This is a 2-year stock chart of Alphabet, where the blue E icons represent the earnings. What's so interesting here is that while the stock almost always rallies before earnings, you can see that with these little yellow arrows into the earnings, the stock goes down off of earnings a lot. In fact, that's what these yellow rectangles are. This is how many times Alphabet missed earnings. It's just a coin flip, but it never interferes with this optimism, this bullish momentum. While we're looking at this, we might as well look at the rest of FANG. So I'm just going to put the rest of the tickers in here, comma delimited. As I said, this works with all of the mega tech stocks, but what we need to do to find the best trades is to focus on the win rates. Netflix and Amazon are a coin flip. Even though the returns are positive, these aren't the best of breed. But a good trade turns into a great trade only after we do risk control. So let's drop a tight stop on these calls and also a tight limit. We'll go down to the close trade when section. We will close these long calls if they go up by 30% in a 2-week period. And we'll also close them if they go down by 30% in a 2-week period. All of a sudden, the trade is clearly in Alphabet and Facebook, not Apple, Netflix, or Amazon. So let's focus on those two. Now we can see the staggering returns, and we can see 15 wins on 1 loss if we held these two as a portfolio. And just so you know, we're not pulling a fast one on you, and that calls always work on these companies. We can just look at the 15 days after earnings. So we'll open 1 day after earnings and close 15 days after earnings. These trades are actually negative. So this is in fact a pre-earnings momentum trade based on the personality of this bull market. While we're here, let's go ahead and look at another trade that's very similar. We'll go to custom earnings, and this time we're going to look to open the trade just 1 week before earnings, so 7 days before earnings and closing it the day before, as opposed to the 2 weeks before earnings trades we looked at with Google and Facebook. And this time we'll look at Nvidia. So we're going to buy a call 7 days before earnings, close it the day before earnings. We'll put a stop and a limit, and we'll look at the last 3 years. And here we can see with Nvidia, 11 wins and 1 loss with a 1,352 total return. And if you're wondering how I knew to look at Nvidia a week before earnings, this is how. We're going to introduce the Pro Scanner, which is available to Trade Machine Pro members. We select Pro Scan, then we select Buy Strategy. We can choose any grouping of stocks, but for now, we'll use the S&P 500. Since we're looking at pre-earnings momentum trades, we're going to scroll down to the pre-earnings section. You'll note that we scan for 14-day, 7-day, and 3-day pre-earnings momentum trades. We'll select the 14-day since that's what we're looking at with Google. The scanner automatically sorts the results by win rate. And since the 14-day scan does not use a stop or limit, the highest win rate in this group of tickers is actually the tech gem Akamai, with 10 wins out of the last 11 earnings sessions for a 91% win rate. We can see a 38% average return per trade, and that includes the 1 loss. That's over 38% for just 14 days. The total backtest return is 426%. Finally, we can see Google, and here are the results before we put in the stop or the limit. We can also sort our results by the total backtest return. So this is for the trader that's comfortable with the backtest that has shown a lower win rate but larger returns. Let's now look at the 1 week backtests and just look at the 3-year results. So we'll tap on 7 days and we'll deactivate the other buttons. We can see Nvidia here. This is a tech darling that has had immense pre-earnings momentum, showing 11 wins out of the last 12 pre-earnings sessions with an average return of 39% in a week or 493%. For those of us that like trading the tech names, we can select the NASDAQ 100 and sharpen our scan results. We can find a familiar name as well, which is Microsoft at the top of the list, which has won for 3 years in a row, the 1 week before earnings, showing an average trade return of 50% per week. Microsoft is one of those curiously forgotten tech names. Let's let the rest of the world forget about Microsoft. We will not. Now, this 7-day pre-earnings backtest and the 3-day earnings backtest, which is really just a tight swing trade, do in fact implement a stop and limit of 40%. This is our first exposure to the Trade Machine Pro Scanner, and all we have done so far is just look at a very small subset of another subset, which are pre-earnings scans, the momentum patterns. But this leads us to one of the other benefits of the Pro Scanner. We can simply click on a ticker, and it will load the backtest in our Trade Machine for us. So let's click on Microsoft, and here are our Microsoft results. 12 wins, no losses. And down here is where the limit gain and the stop loss have already been implemented. We can click on custom strategies and we'll see we are looking at, in fact, this 1 week trade. So we finished step 1. We found answers for momentum trading. Yes, it does work. The trade entry can be 3 days, 7 days, maybe even 14 days before earnings. The scanner shows us which securities have worked the best in the past. It shows us when to exit using a stop loss and a limit gain. It shows us what the historical returns are. It shows us what the historical win rates are. So has momentum trading worked? Yes, it has. Now let's turn to technical trading. While there are hundreds, if not thousands, of technical indicators, in the trade machine we focus on very few. Right now we're going to focus on what has been called the TTM squeeze, first discovered by famed trader John Carter. This signal is actually a combination of 3 technical indicators to make a single signal. And that signal can either be bullish or it can be bearish. Now, it's always important to understand precisely what a trade is doing. So to understand this signal, we have written a full-blown dossier with the videos. You get to the dossiers by going to the Discover tab, and then looking under FAQ, you can go to Technicals and the TTM Squeeze. And when you tap on that link, you get a full-blown explanation of how this works. So not to run too long, we're going to skip a description, but remember, the details are available through the Discover tab, and there is never an excuse to trade without understanding the facility behind it. And while this might sound complex as we've introduced it, like most technical trading, it really isn't. It's very clever, it's very useful, and it's also very easy to understand. So now we will look at technical trading with options, and we won't pay attention to earnings at all. The idea behind the squeeze is that for the vast majority of the time, stocks tend to move pretty quietly sideways. Then they move abruptly either up or down, and we're not talking about those big earnings moves. That is, we're here to answer the question we posed at the top of this video. Does technical analysis work? Here we go. So we'll enter our tickers, we'll look at 5 of them. We'll look at getting long a call spread, never trading earnings, and doing it during the bull squeeze. We'll set our days to expiration to 15, so we're going to be looking at about 2-week options. Then we're going to go to settings, and we're going to go ahead and put it 5 years back in history. And here are the results. We can see in the 3 mega cap tech names, we got Facebook, Amazon, and Alibaba. We're looking at high win rates and large returns. Then we look at another momentum tech name, Activision, which has 10 wins and 1 loss. And then we just look at another momentum name, which isn't a tech stock, and this is just Domino's Pizza, which has seen 12 wins and no losses for a 423% return over the last 5 years. We can just tap on a back test tile. We can see the total return. We can see the average return. We can see the number of wins and losses. We can see what the stock has done over the last 5 years and how this strategy is done. Another thing to note, if we look at Amazon, for example, over 5 years, this trigger only fired 11 times. And it turns out that over the last 5 years, that's 1,824 days, the signal was live for only 144 days, so less than 8% of the time. This is a signal which doesn't happen very often, but when it does, it tends to carry a very strong indicator. While we have done the empirical analysis, and the TTM Squeeze technical indicator is in fact statistically significantly better than just buying a call spread, which is to say, this isn't just happening because there's a bull market. It's fair to ask, does this indicator work during a bull market trying to find bearish indicators? And the answer is, yes, it can. We can now do the same thing, but with the bear squeeze. So we'll enter our tickers, we'll go to a put spread, we'll go to never trade earnings, and we'll look at the bear squeeze. And for this, we will add 40% limits and 40% gains, and we'll look at the 30-day options. In this case, we're looking at a large cap tech stock, a European bank, 2 retailers, that's Kohl's and Kroger, and 1 industrial with Federal Express. And again, we can see when you pick the right companies, you've got high win rates and large returns. The second technical indicator we looked at is the CML Mammoth. That's for moving average and momentum model. And here's how it works. We started with several moving averages. Then we took them and we lined them up relative to where they were for each other. That is, which ones were above the others and which ones were below the others, testing all of the various combinations. We also tested how far apart the moving averages were from each other. That is, were they really spread out or were they tightly grouped together? Then with some machine learning techniques, we found the comparisons and the moving averages that helped predict future stock returns. The next step was to include the current stock price in this measurement, where it lined up relative to the moving averages, and how far it was from them. Once we had a definitive solution for that, we turned to momentum. We didn't only look if a stock had moved up or down on consecutive days, but also by how much. Was it a small move up or a large move up? Or a small move down or a large move down? Finally, we looked at the Bollinger Bands and the Keltner channels, and if the stock was above or below the key levels. With all of that, we were able to build the CML Moving Average Momentum Indicator, CML Mammoth, an empirical and explicitly tested technical indicator. We have the full details of how this technical indicator was created, including the full equation that allows you to calculate it yourself in the Discover tab with great detail. Now let's look at some of the results. We'll start out by entering 4 tickers. We'll do 2 of the chip giants, Nvidia and Lam Research. We'll do everyone's favorite momentum stock, Netflix. And then just for a change of pace, we'll look at Ford Motors, the automobile manufacturer. We'll look at getting long a call, never trading earnings, and we will use the bull mammoth technical indicator. And here are our results. Over the last 5 years, using the options that are the closest to 14 days. You can see across the board the results are enormous. And we can see the win rates. With Nvidia, we're looking at a 60% win rate. So this trade certainly does lose. With Lam Research, we're looking at a win rate of 65%. With Netflix, we're actually looking at a win rate of 53.5%, so 23 wins and 20 losses. And with Ford, over 5 years, even though this only triggered 7 times, it did in fact win all 7 times. But the key to notice here is that this trade doesn't occur a lot. It does occur more frequently with stocks that are more volatile. So we can see that technology stocks have more trades triggered than Ford over the last 5 years. But let's dive deeper. If we tap on a backtest tile, we can see the details. So for Nvidia, we can see the average return was 40.8%, 21 wins and 14 losses. So an average return of 40% over 35 trades every 2 weeks. The average win was over 114%, and the average loss was 69%. So when this trade goes bad, it certainly is a substantial loser. But the trades win more often than they lose, and when the trades win, they're substantially larger, almost 2 to 1, than the losses. We can take a look at Ford, a less volatile stock. We can see the average trade return, again, this is over 14 days, is 65.5%, with 7 wins and no losses. However, over 5 years, this only occurred 7 times, so it's a trade that requires patience. As always, to learn more about the model, you can just go to the Discover tab, and underneath Frequently Asked Questions, you can go to the details behind the CML Mammoth model. Tap on that link, and here you will see a full description of the model, how to use it, the general idea behind it, and then step by step, variable by variable, the statistical results, the significance, and all of the details that allow you to recreate this model yourself if you want to. So that's it. We wanted answers to these questions. Does technical trading actually work? What is the signal for trade entry? It's the bull or bear squeeze, or the bull or bear mammoth models. And where do we find discovery of the companies or ETFs where this has worked the best in the past? As always, it goes back to the Pro Scanner. And now we have completed step 2. We have with great specificity questioned, tested, and discovered the results of patterned pre-earnings momentum and technical momentum irrespective of earnings. Our final task now is to answer, what about non-directional option trading? And here we go. It's long been believed and proven that simply owning an at-the-money straddle in most stocks is a loser. In fact, we can do it with our backtester looking at Google. Here it is, getting long a straddle, doing nothing with earnings over the last 3 years, buying the 30-day option. This trade has only a 41% win rate and is down 57% over the last 3 years. But we started this discussion with a question, which is, what about non-directional option trading? Is there a way to profit from it without betting on a bull market continuing, or even more abruptly, even if we go into a bear market or correction? And we want empirical results. Does this work? And if so, when has been the best trade entry? Which stocks have worked the best? What has been the best time to exit? Since we see normally owning a straddle in Google has been a loser, let's try something different. We'll come down to custom earnings. And now we'll look at opening the trade 1 day after earnings and closing it the week after earnings. That is, it's a 1-week trade right after earnings. So the stock does its gymnastics after earnings. We wait a full day, then we buy a straddle with the 30-day options. And here are those results. Over the last 11 earning periods, it has won 9 times and only lost twice, with a 263% total return. Remember, when we did this without using custom earnings dating, it was a 57.5% loser. We can find dozens, if not hundreds, of these opportunities where owning volatility looks like a loser and the market believes it to be a loser. But timing it correctly around earnings has proven to be a gigantic winner. And the answer, of course, whether it's before earnings or after earnings, is in the Pro Scanner. So we go back to the Pro Scanner, we go by strategy, We pick our ticker group. In this case, we'll just look at the S&P 500. We have the 7 days post-earnings long straddle, which we looked at with Google, or if we prefer, we can look at 7 days pre-earnings or even 14 days pre-earnings. So these three scans find us the companies where owning volatility, even in this low VIX world, has been a winner. So we can answer empirically. We do know the best trade entry. We do know which stocks have worked the best, and we do know the best time to exit by using our stops and limits. We started this discussion saying we wanted answers to three questions. Has momentum trading actually worked? Has technical analysis actually worked? Has non-directional option trading actually worked? And if so, we should have empirical and explicit answers for each of those. We've answered our questions, and we have been empirical, and we have been explicit. There are other questions that the trade machine can answer, like has non-directional option trading while selling options worked? And if so, when? And in which securities? And what are the historical win rates? The trade machine was built to answer questions for traders. It was built to be empirical. It was built to be explicit. And of course, it was built to be easy to use. There's so much more the scanner has, including custom portfolio building. But for now, we have succeeded in our goal. We have answered our questions, and we hope you are a more powerful trader for watching. Thank you for your time. Now, of course, we just focused on earnings-related trades. If you like trading the actual event, we have a button for that. You can just click Only Trade Earnings and test any strategy you want, whether it be custom or pre-built, during the earnings event. And of course, for all other times, you can always just select Never Trade Earnings, and you can do the same thing. You can create your own custom strategy or pre-built strategies. And finally, it bears repeating, while we just looked at the FANG stocks, we cover every stock and every ETF and every index in North America as well. The opportunities are there. You just need to find them. So this is it. This is how people profit from the option market. It's preparation, not luck. Thanks for watching. Okay. Now I'm going to get into some deeper trading. Just hold on 1 second while I get my headphones plugged in. All right. Okay, and let me get out of this. All right, so just got to do this again as a reminder to the video we just played. The prices and other statistics on the video do not reflect the impact of any certain market factors, such as liquidity, slippage, and commissions. And of course, past performance does not guarantee future results. Okay, good. I just want to slow things down a bit and get into some actual trades. Sometimes it doesn't come across quite clearly in the video. Some of the feedback we got on this video is that it was a lot of information, but very fast. So I'll just take a step back. There are 3 tabs here. There's the backtester tab. That's where you do all your backtesting. There's the scanning tab, where you look by strategy and say, hey, show me the best bull mammoth calls or show me the pre-earning straddles that work. And then there's the discover tab. The discover tab has all of the FAQ. So, you know, like what are your strategies? What machine learning did you use? What are the results? Things like that. But we also have something that we call market insights. So we send our members 3 insights a week, which are back tests that are of particular interest at the moment. So for example, today, just a few hours ago, we sent out an insight here, which talks about Apple's pre-earnings pattern, but this time we were just looking at an out-of-the-money strangle. And we can see that it won 10 of the last 12 times. In fact, if we just click the button, we can see that actual back test. So that's what you get in insights. So again, there's the back test tab, there's the scanning tab, and there's the discover tab. And you get 3 of these articles a week to keep you kind of abreast of the market. Oh yes, I should probably mention it. This software, Trade Machine Pro, before I get into some trades, is $129 a month for anyone that is not a member. But for those of you on this webinar through Lightspeed, you can get it for only $79 a month, and we guarantee your price will never go up. So it's month to month. We require no contracts at any time. You get all of the upgrades for free. And if you want to get it, I'll just leave this here for like 5 seconds. You just go to www.cmlviz.com/LS, LS for Lightspeed. So normally $129 a month, today $79 a month. It's month to month. Your price never goes up. You can cancel anytime. And after the first 30 days, if you just don't like it, you just tell us. I'll give you your money back.
Yeah, this is Jason jumping in. Yeah, something that's cool about the way that we sort of build product and run this thing is, number one, we reward people for getting in early because, we've added a whole bunch of new features, but the price that people get in for stays that way. So we just added 5 years of data. We just added that machine learning algorithm called Mammoth, which we think is one of the coolest and most exciting parts of the product. But that everyone's just sort of grandfathered into that, who's become part of the community. And what's even better is that every time we make a decision about what to build next, we just send a survey out to all of our users. We see what's most popular, and then we build it. So it's really the community that's in charge of our direction. And it's really exciting for us because we know when we build features that they get used right away. We get great feedback from our users. We put stuff out in a beta, and they get to see it early. So it's just an exciting process overall to be a part of, and so that's kind of one of the benefits of getting in early.
Cool, very well said. All right, guys, as promised, a few things I want to touch on. First thing I'm going to do is a little bit of index trades. So for those of you that do like to trade indices, hold on a second. Oh, hey, Jay, can you mute your? I can hear.
Sure thing. I'll just answer the question really quick. Mike asked, is it free for the first 30 days? Our policy is if you don't like it, it's pretty rare, but if it's just not for you, you trade futures, you thought this had futures options in it or something like that, just ask us. And we always, if you're asking the first 30 days, we'll always give you a refund. So that's the approach that we take.
Yeah, absolutely. And also if it's 31 days, don't worry about it. We're not like that. So it's just, if you don't like it, just let us know. All right, so I'm gonna touch on the indices for a second, then I'm gonna go back to FANG, and then finally I have to show you this VXX trade just because it's like an obsession. I just have to show everyone so they know this trade exists. Okay, so let's look at the Russell 2000, RUT, and the NASDAQ 100. And let's look at just buying a call, but using Bull Mammoth, which is our new machine learning technical. And I'm going to put in a stop loss of 75%. So the options go down by 75%. Let's just blow it out. And we'll use the 15-day options, the options that are closest to 15 days from expiration. So you can see in the rut over the last, I believe this is 3 years. I'll just click the button to make sure. Yeah. Okay. Over the last 3 years, we see this trade wins a little bit more than half the time. It's just that when it wins large. So let's actually click on the back test. So the average return is 25% over 15 days, and that includes the losses. But you can see there's some volatility here, right? The average win is 104% over 25 days, but the average loss is sizable too. I mean, when this trade goes wrong, you're owning calls in something that isn't rising. But here's the most interesting thing. Over the last 3 years, the Russell 2000 has been up 32%. Using this technical indicator, which trades pretty infrequently, it's more than 10x that, right? And anytime you want to see a back test, all of the details are here. So you can go trade by trade, price by price. You can always download it into Excel and go even further. So everything in the back tester is 100% open to the user. You can see it, you can download it, you can massage it, and you can ask questions about it. All right. The next thing I want to do is look at, just really quickly, this is not a trade I do, but I know for some people it's pretty important. I just want to look at some actual earnings trading. So I'm going to look at Facebook, Apple, Amazon, Netflix, and Google. I'm going to look at getting long a strangle, a 40 delta strangle, okay? I'm only going to trade earnings. So this is only earnings trading as opposed to avoiding earnings, right? Let's do this. Let's take a look at the 10-day option. Maybe it's probably better. I'm going to take out my stops and limits and just set no stops and limits. All right, so here are the results. So why do people not like trading earnings? Because sometimes you get crushed, right? This is what has happened in Facebook. In the last 3 years, 2 winners, 10 losers, 93% loser. Apple, not so good. But there is one interesting thing, and of course, none of this is, we're not making advice, and I'm just pointing some things out. Netflix does have this interesting thing with earnings, is that when it moves, it does tend to move pretty big. So this is only, in the last 3 years, it's been a winner 6 times and a loser 6 times. So it is a coin flip, but it's a coin flip where the average win is 102%, and the average loss is 59%. So that's just something to keep in mind. So if you like earnings trading, that's just the way you do it. You can do this. And obviously, you can do the reverse if you want to, let's say, short a strangle or short an iron condor. You can also do that. So those of you who like to sell volatility into earnings, again, probably don't want to do that uncovered, and you can look at like our iron condors, but just know that that exists. All right, now I just have to get to a trade that I promised. It's with the VXX, and just something you should know. So first of all, I'm gonna just kind of introduce the VXX real quick because not everyone knows what it is. Okay, so the VXX is an ETN, and it always goes down if the VIX stays in contango. And that's just a fancy way of saying that the further out VIX futures are priced higher than the current month. So this is just a snapshot of VIX futures. And so this was done in middle of August last year. And you can see every next expiration, this is a price of VIX futures, they're higher. This is called contango, where every next expiration shows a higher price, okay? This is what the VXX has done. It's been around for 9 years. This is what the VXX has done over 9 years. It's down 99.96% since inception, okay? So yeah, this is a real thing, and it really does essentially go to zero. Then it reverse splits something like 10 to 1, and then it goes to zero again, and then it reverse splits, and then it goes 10. It just kind of repeats. Now, there are these periods where VIX gets out of contango and VXX pops, and that's what scares people. So I'm going to show the back test of this and how to avoid these little blips where you can capture this VXX trend just going to oblivion, going to zero, but avoiding these little points that would really hurt a back test. Okay, so let's start with the simple idea. We're gonna buy a put, a 50 delta put at the money put in the VXX over the last 3 years, and we'll use the 30-day options. Okay, as you would imagine, the return is gigantic because VXX gets crushed. But you'll notice that the win rate is only 55%. So we are, with this trade using the 30-day options, this backtest is showing you're getting caught a little bit in those moments where the VIX kind of goes crazy, where it gets out of contango. Remember, it's okay if the VIX goes up. It just, if it gets out of contango, that's what happens. That's what hurts the VXX. And so we can actually click on it and see, yeah, over the last 3 years, VXX is down 98%, of course. This trade is up 514%. But I just want to show you the power of having a computer and computing behind your trading. All right, all I'm going to do is I'm going to go from the 30-day option to the 60-day option. So rather than buying a 1-month put, I'm going to buy a 2-month put. And of course that makes sense because we're trying to avoid these blips, and the best way to avoid these blips is just to own options that don't expire during this time. So maybe slightly longer options, okay? So the numbers are going to change fast. So just remember 514% return and a 55% win rate. And look what happens when we just have the ability to say, let's try it every 2 months. All of a sudden, the return went from 580% to 1,300%. But look at that win rate. Went from 55% to 74%. So over the last 3 years, we did this every 60 days, so 31 times. It won 23 times and only lost 8. And I do this here for 2 reasons. First of all, as I said, it's sort of my compulsion to show people the VXX. It's just something you should be aware of. If you don't want to trade it, that's fine. Just know that this exists. And if you're wondering if it's liquid, it is. It trades hundreds of thousands of contracts a day. This isn't something where the markets are $5 wide and I'm just showing you something totally useless. But it's also to show the power of a backtester, like what a backtester can show us. I know so many people that do this VXX trade. In fact, we did it on the floor a lot, and we tended to use the monthly options. We tended to do this. And in general, yeah, I mean, it worked really well, no problem. But if we just would have had this ability to look out 60 days or 90 days or 120 days, I mean, this is just a higher probability trade, all right? The last thing I wanted to do is touch on Mammoth for 1 second. This is our new technical signal. And you can look at the details of Mammoth in the FAQ. It says the details behind the CML Mammoth model, okay? If you click on it, it tells you about, what's the hypothesis. So we're scientists and traders. So, there has to be a hypothesis. Why should this work? Here are the moving averages. Here how momentum is used. And we actually do something that I'm not sure very many other people do. We actually give you the full equation, so you can actually write it down and do it yourself. So we actually show you what the results are. And if you're curious, if you just held a call and rolled it every 2 weeks during this bull market in the 270 most liquid names, so the names where there, there isn't a lot of slippage, where there's at least 3,000 contracts traded a day, you would have made 4.5% every 2 weeks, which, remember, this is 2 weeks, so that's actually remarkable. That's how powerful this bull market has been. That's about 9% a month just owning calls, right? Using a mammoth over the last 5 years, that would have been 17.9% every 2 weeks. So this is the power of using machine learning, of using computational finance, of using a backtester to help you find patterns. And certainly, past results do not guarantee the future, but it's always good to know and to use the power of computing, so at least you can check your ideas and check your trades. All right, so this is the end of my formal presentation. We looked at momentum trading and when it does work and when it doesn't work. We've looked at technical trading and the triggers that have worked and some that don't. We've looked at non-directional trades. We've looked at index trades. We looked at earnings trades. We even looked at an ETN trade. For those of you that like more complex strategies, for example, if you like iron condors, or you just want to build your own strategy, you can do that. There's one strategy I really love to show off, which is the XLF. There's been this sort of great rotation into financials, or so people thought. And it's interesting to look at a strategy, just build a strategy. Let's buy a 50 delta call every 30 days. All right. And let's sell.
And Ophir, we actually have a question from a user come in that says, can we backtest back ratio, short one at the money and buy two out of the money? So yeah. Perfect time to demo that.
Yeah, exactly. So I'm going to show something slightly different. I'm going to buy the 50 delta call, the monthly, and I'm going to sell the weekly, the 20 delta. So I'm just going to have a rolling call spread. And I'm going to uncheck close all leg with front month options. If I had this checked, this would just trade 1 week and stop. But if I uncheck it, it's going to let the 7-day option expire. It's going to take another one. It's going to let it expire. I'll just call this a rolling calendar, call spread. And I'll even try to spell Cali right. Rolling Cali call spread, right? And I'll just save it. And I'm going to apply it to the XLF. And this is going to be a lot of trades, so it's going to take a second for the trade machine to get the results. So just stand by.
I'll just take that chance to answer a question. Someone asked, is this web-based or does it work on any computer? And the answer to that is definitely yes. Back to you, Ophir.
Yeah, it's web-based, so you just log into a website. So, this is what has happened over the last 3 years if you would have bought the at-the-money monthly call in XLF. XLF is the financial ETF. And then every week you sold the 20 delta call against it. Sold it, sold it, sold it, sold it. Then at the end of the month, you opened it again. The win rate was 78% and the return was 3,000%. And of course, the XLF in the last 3 years is up about 125%. So this is, I can't go through every possible strategy and show you every alternative that's available. They're almost all available to you, but this is the power of having a computer at your side, right? You can test ideas and very quickly see, does this idea work? At least has it worked in the past? And if so, what can you expect? When has it not worked? You can look at the trades that haven't worked and really try to optimize your strategy. So this is the power of having a backtester at your side. This is the power of having computational finance at your side, driven by traders. So just going to show this one more time, unless there are more questions. This software, which is web-based, you just log in. It's just that easy. It's called Trade Machine Pro. It's normally $129 a month. For light speed for this webinar, it is $79 a month. Here's the URL to get it. You just go to cmlviz.com and go /. That's an L and an S, if that isn't clear. LS for light speed. It's month to month. You cancel whenever you want. And You can feel free to try it out in paper trade, and if you don't like it in the first month, just let us know, and we'll just send you a full refund. It's certainly, we don't have a business based upon people who aren't using the software. So unless there are any other questions, this is the end of the...
Yeah, there actually are quite a few questions that have come in. I was just kind of waiting for the right moment. Someone asks, Mike asks, the most difficult variable in other back test systems is the entry point, the days to expiration, and then the day to actually exit. Can you demonstrate how we would change those variables?
Sure. So let's get out of this XLF trade and let's say, look at, let's do the Nvidia pre-earnings trade. So remember, we looked at this trade before. It's getting in Nvidia 7 days before earnings, getting out 1 day before earnings, and just buying a call. Sorry about that. I'll let that load.
Someone just asked, is the video recorded because they missed part of the demo? Yes, it is, and it should be sent to everyone who is on the invite list. So even if you missed part of it, you should get the full video.
Yeah. So let me log in. Pay no attention to the man behind the curtain. Okay. Let's do a custom earnings trade in Nvidia to demonstrate how you can change things like days to expiration and entry points. So just to be clear what we're doing, we are looking at Nvidia opening a call 7 days before earnings, closing it the day before earnings. This is not an earnings bet. Just want to be really clear. This is playing the momentum before earnings. In the last 3 years, it's won 11 times, 764%. Okay, so how do you change the entry? Okay, so changing the entries is easy as just changing the numbers here. So let's say, out of curiosity, what if we tried it 14 days before earnings? And instead of looking at the weekly option, we looked at the monthly option. Let's do that. So you can see that it is not as strong of a signal if you use the 30-day option 2 weeks before earnings. But you can say, well, what if I tried 3 days before earnings and I tried the 30-day option? Okay, again, not as strong of a signal. Or what if I use the weekly option? Oh yeah, Jay, so we can hear you typing. It's a little loud. Sorry. So yeah, so this is how you change your days to entry, things like that. And if you want to see what the backtester is doing, remember, all of the information is behind this tile. You can see every single trade and start date. And if you want to change the days to expiration, then you just go right here. So I'm looking at approximately weekly options here. I'm looking at approximately monthly options here. What this days to expiration field is actually doing is it's finding the options that are the closest to what you're asking for. So if weekly options don't exist, it will probably use the monthly option. If weekly options do exist, then a 7 will be very accurate. So that's how you change days to expiration. That's how this is how you change, let's say, the days to start the trade or to close the trade. Yeah, I don't know. Are there any other questions? Or?
Yeah, there are a couple flowing in. It says, does the pro scan tell the user how far a particular stock is away from earnings?
Oh yeah. Okay. So yeah, so we have our earnings provider, date provider, is Wall Street Horizon, which is, just so you guys know, by far the best earnings provider in the world. They're just magnificent. Every mega hedge fund uses them, and we have the earnings date in our scans, so it's right here. You can just sort by earnings date. Alternatively, anytime you look at a ticker, like we'll just say Apple, just for convenience, we tell you when the next earnings date is here. But if you want to look at it en masse, you just go to the Pro Scanner, select a ticker group, select a strategy like 7 days before earnings, let's say the long straddle, then you can sort by the next earnings date. So you can always look for earnings dates that are coming up and what might be an interesting trade to examine. So for example, when we sent out today our Apple pre-earnings straddle, I noticed that Apple's earnings were due out February 1st, and a week before then it would be January 25th. So in about 2 weeks, that trade would take place. And I literally sorted by this date, found Apple, said, aha, that's the trade I want to write about today. And I wrote about it right here.
Two more questions which are kind of related. We have a client, Dave, who is writing, or David, so thanks for being a customer. He says, essentially, can you address the fact that we've been like in a bull market forever? He said that we should mention that to our users. And someone else was asking about sort of non-directional trades. So those are kind of interrelated.
Yeah, for sure. So we've been in a raging bull market, and let's just all recognize that, right? So while we're showing you things that are working better than just owning a call, we've been in a raging bull market. And if you get in a raging bear market, being long calls is not going to work. So that's the power of the backtester. So in our pre-earnings trades, we have these non-directional strategies, like the 7-day pre-earnings long straddle or the 14 days pre-straddle. So that's exactly what we wrote about today with Apple. In fact, so you can just scan, so I'll just do that. Show me the best in the S&P 500, show me all the, let's say, the highest win rates, just buying a straddle before earnings and doing nothing else, right? This is non-directional. So you can see in Monsanto, for example, it's won 2 years in a row. There's also after earnings. So you can look at the after earnings straddle, which says, okay, let a stock kind of do its gymnastics. Ajay, can you mute yourself for a sec? Sorry,
I keep forgetting.
Yeah. So for example, in Under Armour, whether you like the stock or don't, and the stock's crashing, yeah. If you waited 1 day after earnings, then for the next week, you bought a straddle, which is totally non-directional. It's won 7 times in a row. And not only has it won 7 times in a row, in that 1 week, the average return was almost 27%. So I can just click on UA. And it'll load that back test. And then what I'll do is I'll actually show you the custom earnings field. I'll just let that load. So yeah, so to answer your question, yes, there are non-directional trades. So I'll go to custom earnings, and you can see this is 1 day after earnings, opening, and then closing. So we have that. But even more than that, we also have bearish indicators, right? So these are non-directional, fine. So we have bullish and non-directional. We also have a bearish indicator. So here is the bearish squeeze. Let's look at, let's say, the S&P 500, okay? And let's look at the high win rates. So for example, MXIM, actually, let's use Federal Express just because it's something that people are more familiar with. All right, so here's FedEx. Now I want you to keep this in mind. This is very important. This is buying a put spread in the middle of a raging bull market, right? This is buying a put spread during a bull market. And we can see this is won 10 times and only lost 4, okay? And you can go into the Pro Scanner and look for those bearish triggers. Right now we have Bull Mammoth. We literally released Mammoth today for this webinar. By the end of this week, we're gonna have the Bear Mammoth as well. So you'll have another legitimate bear scan to look at, and in my opinion, you should think of your option trades as a portfolio of trades. So you're going to have bullish momentum trades. You should also have some bearish momentum trades. You're going to have trades where you're owning volatility. You should have trades where you're selling volatility, and you can find the best of all of them in the scanner. It actually takes me to one more thing. The scanner does allow you to do a custom portfolio. So if I go by ticker, if you have Chrome, you can actually make this bigger. If you don't have Chrome, don't worry about it, but you can just make it easier. If you enter a common delimited list, so let's do, the famous stocks, just because why not? I'm forgetting one. Facebook, Google. Right. Let's put Nvidia in here as well. Alibaba, Baidu. Okay, so now I'm doing a scan for every single strategy, but just for these tickers. And then I can see the ones that have the highest win rates. And if I sort by strategy type, I can say, okay, I feel like doing a momentum trade. All right, I think I'm going to do a Google momentum trade, 14 days before earnings. That looks good. Okay, but I'm going to do that. I also want to look for, let's say, something to offset that, something that is non-directional. So you just need to find, okay, let's find the bear comes before bull, right? Okay. Oh, actually, you can just search here. Just type in bear. No, that's weird. Here, or I will look for something like a vol scalp. So here's something in Facebook. This is a vol. This is a custom strategy where you're buying the monthly straddle and selling the weekly straddle right before earnings. And so you would want to take, let's say, a bullish bet with a non-directional bet. And so you can create a portfolio of trades that offset delta risk, vega risk, gamma risk. And And that's really how the best option traders in the world work, right? You don't just make a momentum bet. You don't just sell volatility. You know, if you're going to do something before earnings that bets on volatility, well, you probably want to look at, I already know the answer to this, you probably want to look at Facebook right after earnings. So here's what happens with Facebook right after earnings. You wait for 2 days after earnings in Facebook, and then look at the next 3 weeks, and you sell an iron condor, which is a risk-protected strategy, that is, it's risk-defined. Over the last 3 years, you're going to find 11 winners and 1 loser in the iron condor. So to address that question, yeah, I mean, so this is a risk-controlled strategy, which is non-directional, which has shown huge results, right? So that's great. You should have some strategies where you're selling vol, and have some strategies where you're buying vol, and have some strategies where you're buying calls, and maybe some strategies where you're buying puts. So the backtester was designed to create a portfolio of trades for you, not just to find the best of one type of strategy. And that's why the scanner has so many strategies, right? Bullish and bearish. Find the best of breed for each. All right, I hope that answered that question. Also, for the one member we have who asked, you'll notice that in our write-ups, we're doing more and more less directional stuff. So we sent out Apple today, which is non-directional. We sent out Regeneron on the 4th, which is non-directional. So we're starting to do a lot of that as well.
Yeah, I actually, the VXX trade, which Ophir mentioned earlier, it's interesting. If you dive in pretty deep, I love that trade, and it's been super great for me. Not, obviously we can't make recommendations, but what's really interesting about it is that you can sort of take advantage of the structure of the volatility, and just kind of assuming that things kind of stay stable in the short term. But with a big part of what I do with the proceeds from that trade, which has been great for me, is I buy long dated puts to sort of secure the rest of my trading on the SPY. So, you know, to me, it feels like kind of a arbitrage ahead, because I kind of have free downside on the market. So that's one way that I've, you know, personally used the tool to sort of hedge the downside risk. So the question comes in, does it give the average entry exit price over X years of back testing? So we do have an average, which Ophir can show you. And we also have, I'm not sure if it was in the video, it was there really quick. But you can actually click download and get all of the trades, including entry and exit prices, and do any kind of work you want to do in a spreadsheet. You can go to town on it with that.
Yeah, I'll just show that. I'm gonna hit click copy. Then I'm gonna open up Excel on my other computer, my other monitor. I'm gonna show you what I'm gonna do. All right, I'm just gonna hit paste. Actually, I'll just hit Control V. Here it is. Here's every single trade in that VXX backtest. Every single trade you can look at, including the P&L and the entry prices and exit prices. So while it's great to look at the tiles to give you direction, yeah, for sure, right? You know, before you do a trade, take a look, see what's happening, look at the entries, look at the exits. None of this is designed to gloss over the details. It's designed to help you find when it's time to look at the details.
We have another great question. Is the Mammoth a black box, or could we put the indicator components in a standard charting platform to use it for trading?
Right, so nothing we do, it is a black box. So if you click on the Discover tab, come down to FAQ, go down to Mammoth, click on it, you know, it'll tell you about it. At the very bottom, we actually give you the equation. This is the equation to create Mammoth on your own. You could subscribe to CML, take the equation, cancel CML, and start trading on our indicator. That's how confident we are that the back testing and the power of computation is that you'll stay with us. So yes, you can take the strategy, you can code it into your own charting package. You could even just cancel. Nothing we do is a black box.
Yeah, and that's another thing. I'm not sure if Ophir mentioned it. He's been doing neural networks and machine learning for so long that, you know, it just seems normal to him. But that's actually how we developed this indicator. Is we pumped it through some machine learning algorithms in order to figure out the perfect blend of all of the technical indicators that we had. And one of the benefits of being on the platform is, number one, you get it, and you get it with, for the same price you've always had the software at. But, as the conditions in the market change, if we start going sideways or we start getting into a bear market, like, we're going to continue running the machine learning, continue upgrading the indicators, continue releasing new indicators that fit the market. So, that's our whole approach. We use the software to trade ourselves, and we're always constantly working with our users, getting feedback from the users, and doing a ton of optimizing and testing to make sure that, like, everything in the tool is representative of what's happening in the market right now.
Yeah, for sure. So my background, I used to be on the institutional side, institutional research. So that's where all this this background comes from, and I'm just bringing it forward to retail. I was sort of tired of making uber rich people even richer, and wanted to bring it to the retail world. So yeah, nothing's a black box. Never is, never will be. Just not our interest. We're here to actually try to help people trade. We're not trying to confuse people.
We had a question about if you can trade things that are not on U.S. exchanges.
And if it has an ADR, then yes. So for example, Alibaba and Baidu. But you cannot trade things that don't have ADRs. So I guess Baba and Baidu do trade on U.S. exchanges, so the answer is no. You can certainly do the Toronto, so like, for example, Shopify. But no international trades other than Canada and ADRs.
We have a question, what software is recommended to complement CML Viz? And I think we can give a shout out to Lightspeed. I personally use LVX through Lightspeed, and I'm very happy with that. I don't know if you have any other comments you want to add to that, Ophir.
No, I agree. We get asked quite often about what brokerage people should use, and we can't really make that recommendation. This, however, is the first brokerage that we've done a webinar for, and it's not for lack of demand. Jason and I used to work for a company called Livevol. Livevol was purchased by SIBO, but the brokerage arm was purchased by Lightspeed. So Lightspeed has the trading software that we developed ourselves, and now Lightspeed owns it, and Jason still trades with it. So Jason's actually a Lightspeed customer because of LVX. So if you want a recommendation for which broker to use, try Lightspeed. And by the way, try LVX. LVX is awesome.
And you could always just get a demo of that as well from our website.
Yeah.
Terry asks, some on the list, which I think he means a scan, some things were listed twice. Why is that? Yeah, the reason for that is simply that there's just different time frames. We'll do a 1 year back test, a 3 year back test, a 5 year back test, and we'll show them all. And so that can be a little confusing at first, but that, yeah, what Ophir is showing there, that back test length in the almost far right column is the difference.
Yep, so here's Apple twice on the pre-earnings call. This is the 1 year test, this is the 3 year test. So that's why you're gonna see strategies twice. Yep.
Okay, a couple more questions in here. It keeps trying to minimize this box. Yeah, someone says I've used LVX for over a year now and love it. I'm also a Lightspeed client for LVX, so there you go.
Awesome. Yeah, use LVX.
Yeah, a couple more questions about, someone asked, are there any short strangle straddles in the scanner?
Yeah.
Go ahead.
Yeah,
actually,
sure. Yeah, so we do. You can try, so we have only trading earnings, long strangles. We do have some scans that look to sell vol, so like just selling put spreads, for example. Long strangles. You can, there's also selling iron condors. This is a really interesting strategy. This is very interesting. Selling a 1 month put spread right after earnings. And you can see how it's worked on like T-Mobile and Xilinx. It's actually worked really well on Adobe and Facebook as well. And if you want to try selling strangles, feel free, right? So let's just try it. Strangle, short. Let's, I don't know, when do you want to do it? Let's do it the week before earnings. I don't know, why not? Let's say 1 week before earnings, we want to sell strangles. Let's sell the 40-40 strangle, And to make things interesting, let's do it in the FANG stocks. So Facebook, Apple, Nvidia, Netflix, and Google. Close enough to the FANG stocks. I didn't include Amazon, sorry. So here's what selling Strangles right before earnings does, but of course I'm going to show you something better. It's after earnings where the key is, right? One day after earnings for the next week. Let's actually look at the 7-day strangle. So this will load.
Yeah, someone is asking about just sort of what scans we have in there, and so and when we add more, and so that's something that we will always send out to the users and let them decide. So there's free text as part of our surveys, or if people are making requests, then we can add those to the next survey, and if users vote it up, we add them. We add scans relatively quickly. That's not a huge effort for us, so it's one of the easier things we can do.
Yeah, that's absolutely true. So this, I think I did something wrong with it. Oh. I wanted to show you a strangle sale, but I didn't do it right. It's one day after earnings for the week after earnings. Sorry about that. And I wanted to do it for Facebook, Apple, Netflix, Amazon, Google. There we go. There you go. So selling Strangles. I would prefer iron condors. Just gonna say that out loud again. But like, it's just been a phenomenon now. Selling vol after Facebook earnings has just worked extremely well. This is selling a strangle. If you turned it into an iron condor and actually changed the days from, like 1 day to actually 3 weeks, and then made this monthly. Sorry, I'm driving the back tester crazy right now. So you can test anything you want in the back tester, and if you want the scans in there, like Jason said, it's actually, I know it doesn't seem like it should be, but it's actually pretty easy for us to get new scans in there. Of all the things we do, that's one of the easier things. So let me back test. Yeah. So are there any other questions?
I think we're getting pretty close to wrapping up in terms of the questions.
All right. So last time, guys, you should give the backtester a try. I don't know any other way to say it. If you don't like it in the first month, you just tell us and we cancel it and refund you fully. You don't have to make any trades if you don't want to. You can just paper trade. Say, well, I would have used the backtester to do this. Let's see if it would have worked. Oh, it would have worked. Or, oh, it wouldn't have worked. And so this is going to go back up to $129 a month pretty quickly. This actually is a special for Lightspeed. You can get to it through www.cmlviz.com. Here, I'll put this in all caps so the letters don't look like numbers. And that's it. It's as easy to use as we've shown you. It's impossible to show everything, but there's just infinity things you can do. You can create your own strategies like I showed with the XLF and look rolling call spreads. And you can only look at selling vol and ETFs while, buying vol and tech stocks. There's just so much you can do. And the truth of the matter is there's just no human being in the world that can do what a computer can do. That's just the reality.
Yeah, so thanks everyone for attending. Everyone that was on the list, if there's some people that came late and have some questions, so you'll get the full video, so definitely go over that. And we've had a couple people say that they're going to be signing up soon, so we'll look forward to having you as part of the community. Yeah, thanks everyone for the positive remarks.
Thank you guys so much. Certainly, guys, if anyone has questions, or reach out to Ophir and Jason. If not, send it to Lightspeed. We'll definitely point you in the right direction and get in contact with them. And of course, this webinar is going to be posted onto our website as well within a couple days, so you can always review it. And I'm certainly sure they would be happy to answer any questions as well through email or contacting them directly. Guys,
yeah, absolutely. You can hit up support@cmlviz.com with questions, and we can help you there.
Great. Thank you guys so much. We appreciate it. Hopefully, we'll get you guys back here soon. Do like a follow up and see how guys are really taking advantage of some of these indicators and information. So we appreciate it very much. Guys, everyone, thank you for joining us, and just let us know how we can help. Thank you.
All right. Thanks, everyone. Thanks, Rob.
Take care. Thank you, guys.
All right. Bye, everyone.